Hello guys, Billy FS here, and in this video we are going to talk about supply and demand, specifically where to find the supply and demand. We already made a video about supply and demand, but that was how to find or how to determine a supply and demand zone or how to validate a supply and demand zone. But if you know how to find the zone, but you don't know where to look to find the zone, then that becomes a problem for you. So that is what we are going to address in this video. So if you haven't liked and subscribed, make sure you do so to help us grow the channel. If you have any question, you can leave them in the comment section and I will come and attend to you personally. All right, so let's get into it. A little bit of recap on what we did in the previous video, that is how to find a supply and demand. We realized that supply and demand is just a bullish candle being engulfed by a bearish candle on the higher time frame. So if you have something like this, we have this bullish candle that has been engulfed by the bearish candle. You can see this small bullish candle has been engulfed by this bearish candle. So that becomes what? That becomes a supply. What can happen on the lower time frame is that the market can trade it, right? Either with a single candle or structure, mitigate the supply that is sitting right here and drop. Okay, and the opposite thing applies to what? Demand. Demand is just a bearish candle being engulfed by a bullish candle. So on the higher time frame, you might see something like this, but when you go to the lower time frame, what is going to happen is very simple. The market is going to come with either a single candle or market structure like it came for the supply, and it's going to what? Move up. So this was basically what we looked at in our previous video, and we learned a lot of tricks and tips that will help us to identify high probability what zones. Without much ado, let's jump into the content of this video. And before you understand where to find the supply and demand, you must first of all understand supply and demand as a whole. I think that is a popular topic, and a lot of people have done a lot of videos about that. So if you don't understand, I encourage you to maybe Google something or talk to ChatGPT, right? Because that is going to make it easier for you. But for the purposes of this video, I'm going to try to make it as simple as possible. So when we are talking about the demand, we are talking about a lot of buyers coming into the market to push the price up. And if you are talking about supply, we are talking about a lot of sellers coming into the market to push the price up. All right. So now that you have gotten that across, let us understand something important over here. When there are a lot of buyers in the market, the candle closes bullish. And when there are a lot of sellers in the market, the candle closes what? Bearish. Okay, let's think of it that way. So let's look at this area that is sitting right here, this zone. So you can see that the first candle closed bullish, the next candle closed bullish, right? Then we had another bullish candle. So we had about one, two, three, four consecutive what bullish candle before we had what? Sellers coming into the market. Right. Now the idea over here is that when the market closes bullish, the bulls or the people who push the market up to close bullish are still lurking within that bullish candle to push the market up again. They are still within that bullish candle to push the market up again, right? So if you want to remove them or if you want to trade lower, you must what? You must take them out or you must invalidate their what? Their demand before you can move the market down again, right? That is extremely important because if you don't understand that, what you're going to talk about this video or what you're going to talk about in this video is going to be very, very difficult for you to understand. And I'm going to repeat that so that you get it very well. Okay. So if you have the market closing bearish like this, it means that the people who move the market to be bearish are still waiting within this candle, right? They are still waiting within that bearish candle to push the market down. Okay. So if you want to move up across them and close the price to be what? Bullish above this bearish candle, then you have to what? Remove their supply before you're able to what? Be able to move lower, right? Sorry, before you're able to move higher. That is something that you have to understand. So it holds that if the market closes bullish, we are giving preference to the bulls to continue moving the price up. And if the market closes bearish, we are giving preference to the bears to continue moving the price what? Down, right? That is a very simple analogy, but it is not as simple as you think. I promise you that if you understand this, it is going to be a game changer in your trading and you're going to be able to identify supply and demand as if it was nothing. So first of all, before you do that, you have to be on a higher time frame. Unless you want to be a scalper, that is when you be on a 15-minute time frame and a 30-minute time frame, start your analysis. But for the purposes of day trading and swing trading, we start on a higher time frame, and I'm going to specifically take that higher time frame to be the daily time frame. Okay, so we have the daily time frame, And let's use what you just learned to be able to understand what the market just did around here. Okay. So first of all, let's consider this bullish candle that closed around here. Okay. We are going to look at a lot of examples. So if you don't understand, make sure you stick to it to make it easy for you. So this candle over here closed bullish, the small candle in the middle. I'm going to mark the low of that candle. I think I should zoom in a little bit. Okay. So it closed bullish, right? So what do you see? If the market closes bullish, then it means that the people who made the market to move up are still waiting within that candle to probably push the market towards up again. So it means that there's demand within that candle. So where do you find a supply and demand? We find our supply and demand within candles. We find our supply and demand what? Within candles. That is what I'm trying to make you understand. That is what I am trying to what? Arrive at. We find supply and demand within what? Candles. So we can see this huge bearish candle that closed over here. It means that the supply was inside. And you can see consecutive bullish candle. These candles are probably trading bullish before because maybe they have not what reached the supply of that huge bearish candle. So you can see that they are just trading within that bearish candle, right? So you mark the high of the bearish candle. And when you go to the higher time frame, sorry, the lower time frame, you are just going to see that the market is going to be having some kind of a pending supply over here. That price is probably trading inside right now. So at that point, we can anticipate the market to what? The market to drop from there, right? But let's focus on the bullish candles over here. We have this candle closing bullish. Assuming that we don't know that this market is going to close bullish, we don't know what it's going to do, but we probably know that this candle has closed bullish because we waited for that the previous day. So what do? Let's mark the beginning of the candle and let's mark the end of the candle. So this is the beginning of the candle, the end of the candle. Want to go to the lower time frame. All right. So now we are on the 1 hour time frame. And 1 hour time frame, you can see the candle that closed bullish to be this candle that is right here. And you can see the candle that was the follow-up candle that also closed bullish to come. It came down and it mitigated something over here, right? You can see that, and it started what shooting up. That is very important, right? So what did we see? Since this candle closed bullish, it holds that the market was probably having some kind of a demand over here. The people who push this market up for it to close bullish are lurking within that candle to what push the next candle up if it has not reached an area of supply on the what on the based on the order flow or based on the market structure or on the higher time frame. Okay, so since this candle closed bullish, we anticipate the demand within this candle to what to hold. So where is the demand within that candle? What did I say demand was at the beginning of the lesson? I said demand is just bullish candle engulfing a bearish candle. So you can see this huge bullish candle engulfing this three consecutive bearish candles. So you can choose that to be your demand. But if you want to refine, you can what send it to the low of the candle, the last bullish candle, sorry, the last bearish candle before the what the bullish move. That becomes your demand if you want to refine. But remember that if you refine, sometimes the market will not come to the area of refinement. It's just going to what? Just going to use the wicks over here and start moving away. Another support and resistance. We are going to talk about it in another video, right? So we just waited for that candle, one candle to close bullish on a daily time frame, and you anticipated that okay, the following candle that is going to come is going to go bullish because the people who push this candle up to be bullish, they might be lacking within that candle to move the market up again. That is going to make the next candle to continue to go bullish. That is very simple. Nothing too complicated over here. If the candle closes bearish, anticipate the next candle to what? Also close bearish, right? Where is it going to trade to before it continues the bearish movement? It's just going to trade to an area. Since you're talking about bearish, it's going to be a supply. It's just going to trade to a bullish candle that was completely engulfed by what? By a bearish candle. Very simple, very mechanical, nothing too complicated, guys. All right, so let's look at another example. This thing works on all time frame, okay? It works on all time frame. It is not because I started on the daily time frame doesn't mean that you have to be using the candles. You can be using 1 hour candles, you can be using hour candles, you can be using 30 minutes candle, right? Depends on the type of trader that we are. So let's look at another example. Let's start on the 4-hour time frame at this time. Okay, so let's look at this huge 4-hour candle. Let's look at where it started. Let's look at where it started. Started at a high over here, right? And where did it end? It ended on this bullish candle. Okay, so let's mark that. And now let's move on to the lower time frame and let's understand something. Okay, did this candle leave any supply, right? Did it leave any supply? That is one thing that you have to ask yourself. Yes, it left a supply. What is the supply? The supply is this area. You can see this bullish candle that was completely what engulfed by the bearish candle. This is the supply that moved this what candle down, or that caused this bearish movement. You anticipate the market to reverse to this area and what move down, right? It is obvious that the market did not get there. It's just got to the lows of the consolidation, and that is support and resistance. Okay, we are going to talk about that in another video once again, but this time we are talking about supply and demand. Okay, so we anticipated the market to reach this area, trade to this area before what? Before dropping, but based on support and resistance, it didn't do that. It just dropped from there. Okay. So if you know something like this, it means that when you go to, let's say, the 5 minute time frame or the 15-minute time frame, you can even take a counter trade, right? You can take a counter trade from this area to this area for supply, because we know that the market is going to come to the supply before it dumps, right? But if you also know supply and demand, sorry, the support and resistance, you can also know that the market might come to the what? The area of support that was broken. Now it's turning into what? A resistance, then it's going to what? Come from there. Okay, so these things are not complicated at all. All right, so let's pay attention to this move that happened over here, and let's look at how we can use that same analogy to help us get probably a counter trade from here. Okay, so let's move on to the 15-minute time frame. All right, let's look at the 1 hour time frame first. Let's look at the 2 hour time frame. The 4 hour time frame, it was just a single candle. Okay, let me remove this vertical line so that you understand it better. So we can see that on the 1 hour time frame, what is happening? We have this bearish candle that is sitting right here. So we mark the high of that bearish candle. We mark the high of that bearish candle. Okay, and let's go to the lower time frame to see the supply of that bearish candle. So the 15-minute time frame. So you can see we identify supply and demand within candles. Okay, the candles that close bearish and bullish are the ones that are going to help us identify the supply and demand. It doesn't have to be what complicated. So where is the supply of that 2 hour candle? The supply is the bullish candle that has been engulfed by the bearish candle. So it's basically this huge bullish candle that is sitting right here. So if the market has not gotten to the supply, we can take counter trades, right? We can take a counter trade from here till the market gets to the supply before it does what? Before it drops from there. Very simple. So how do you take the counter trade? You wait for market structure. That is very simple. You wait for the market to what? Make a higher high. Then you wait for the pullback. You wait for the pullback into a demand zone. You know how to identify your demand zone right now. I told you the last what? The last bearish candle before the bullish candle, or the bearish candle that has been engulfed by the bullish candle. Okay. So you wait for the market to tap into that. Then you take an entry to the supply. Okay. And if the market reaches the supply, or before the market reaches the supply, make sure your price or your stop loss, whatever, is going to be a stop, is going to be a break even, right? Because basically what is going to happen is that the market can get to this supply and what? Move down. It can get to this supply and what? Continue to move down. You are never, and I'm going to repeat, you are never too sure whether the market is going to break the supply or going to mitigate the supply and drop. So by the time that the market moves to this supply, your stop loss is already at break even, or you're taking partial profit off the table. That is what you need to understand so far as where to identify supply and demand is what concerned. So if you have a price action like this, then what you should have done is, you can see over here we had the market pull up, it retraced, then it made what? It made a high. So you position at your what? At your demand. Where's the demand once again? The bearish candle that was totally engulfed by the bullish candle. So you can see the bearish candle. You can long the market over here. That was engulfed by the bullish candle. Okay. And your stop loss goes below the low of the demand, and your TP there the higher time frame of supply. This was 4 hour supply and this was 2 hour supply. So you anticipate that the market is going to we anticipate that the market is going to what trade to the higher time frame of supply, but it does not get there. It retraces midway. So that is why risk management is important. So you take partials along the way. Maybe you take like 1:3, or you take like maybe 1:2 initially, or you go break even at 1:1. That is just trade management, and that is beyond the scope of what this video. So that is going to be all for this video. Very, very mechanical, nothing too complicated. Way to identify supply and demand, we identify them within candles. Okay, you identify them within candles, higher time frame candles. Go to the lower time frame and you find those areas and you mark them. And if you want to take a counter trade from them, counter trade to them, you do it. And if you want to take a trade away from them, you wait for confirmation, like maybe double tops, market structure shift, and all other what confirmation that maybe you learned along the way of your trading journey. You can use those kind of what confirmation to help you identify entries. That is going to be all for this video. Once again, make sure to like and subscribe if you haven't done so, to help us grow the channel. If you have any questions, leave them in the comment section and I will attend to you personally. Billy FS out.